Okay, everybody. Hello and welcome to Investing with IBD for December 18th, 2019. I'm your host, Arusha Pierce, and with me today in the studio is Ed Carson, longtime news editor for IBD and our in-house opinionated Star Wars expert. Thanks for being here, Ed.
Thank you, Arusha.
And so as most of you know, this week is a special week. It is Star Wars week. The movie's coming out tomorrow, actually, and it is Episode 9, the final of this other trilogy that's after the real trilogy. And we're going to talk about a bunch of Star Wars during the podcast, and I guess we're going to allow Ed to vent quite a bit.
Well, what I want to do here is I really do want to be serious about, teaching some lessons from Star Wars that are really useful for investing, but I also want to pass on the message that The Last Jedi was a really bad movie.
Okay, so on today's podcast, we're going to talk about a little bit about the current markets. Then we will talk about the parallels between Star Wars and investing. And, of course, we will end the episode with 3 current stocks. So let's get into the current market, Ed. We're currently in a confirmed uptrend, 4 distribution days on the S&P, 5 on the NASDAQ. Indices continue to make new highs. Leading stocks continue to act well, too. What are your thoughts about this market?
The market looks really good. We've had a couple of days now where we've gone sideways, but all the major averages are above their 10-day lines. Can't really be too upset about that. The leading stocks are doing great. A lot of the uncertainties seem to be cleared up. Obviously there's still, questions about the China trade deal and how will Brexit take place, but a lot of the big uncertainties are gone. So, there look like fairly positive signs. The economy might pick up in 2020.
Yeah, and the market, you still have the whole trade war still out there. Nothing's completely done yet, but so there used to have that wall of worry. There are a lot of people still on the sidelines. Mm-hmm. The market just keeps to crawl away. It is a classic bull market.
Yeah, and we've had this 21-month consolidation period, and we've come out of it. So got a couple of years of earnings that, didn't really get spent, as it were.
Yep, and so you definitely want to make sure you have your watch list fresh. You're keeping an eye out on stocks because there are more and more stocks setting up. You have a lot of cloud stocks that have been starting to break out, even more building the right-hand side of the bases, and we're talking about this a lot on IBD Live, too.
Yeah. There's a lot of great stocks. A lot of those software stocks are coming back. Chips have been on fire. Looks like they're going to keep going with Micron and other things going well.
Right. And Micron is reporting today, right?
They did. And it looks like their guidance wasn't great, which is what they've been doing the last several quarters, but it doesn't seem to matter.
Yeah. Yeah. And a lot of times that's a sign of a good market. The market can, if you're in a good market, even if bad news comes out for a lot of stocks, the stocks will shake it off and they'll recover very quickly. And the other way, if you're in a bad market, you're gonna have the greatest news and it might gap up for a little bit and then they'll sell off really hard. Mm-hmm. So far so good. We've had a lot of gap ups this earnings during this earnings season, and that momentum has carried us through and just brought more and more, giving us more and more reason to have exposure in the market.
Absolutely.
So Ed, let's first talk about your background. You've been at IBD for a long time now, right? How many years?
Yeah, almost 23 years now. And I started in New America, went to economics. I was on the markets team for a little while, but then I've been on the news team for, I guess, probably like 15 years. I'm not exactly sure.
Yeah. And how many hours do you sleep a night?
Oh, well, I'm getting to bed earlier and earlier because I sleep about 6 hours a night. I wake up around 3:20 in the morning to prepare for the news for IBD Live and other things like that.
Yeah, well, if for those of you who are looking on investors.com, if you read the stock market today, you'll see that column updating like at 4 in the morning, like, Ed? And then you might see another stock market today or some other kind of update at 8 o'clock at night, and it's Ed updating that. I'm like, Ed, take a break. You don't have to update the markets all the time.
Yeah, one day, maybe I'll go and see Star Wars again.
Okay. So speaking of Star Wars, you have a number of issues with Star Wars, and this whole thing kind of came about when we were both in the newsroom, and the topic of Star Wars came about. And then you went on a diatribe for like 20 minutes about all the issues you had on Star Wars, and I agreed with a number of them, and I think it was the first time I met someone who knew a lot more about Star Wars than me, but was kind of a lot more jaded about it too. And I think over the years I've become more jaded. I was a huge Star Wars fan years ago before the prequels came out, the episodes 1 through 3.
Yeah, I mean, look, I mean the episodes 4 and 5, Star Wars and Empire Strike Back, those were the best films. And also those were basically the first films I really remember as a kid. Yeah. So they really stick with me. They were simple, really great films, simple messages, a lot of messages that actually translate to investing, as we'll get to.
Yeah.
And just a lot of the other films, our characters aren't good. The plots just don't make sense. They're just not, it really annoyed me how well the critics rated The Last Jedi. I think that annoyed me more than anything else. It's like you're taking this mediocre film and saying it's like Oscar-winning potential here. It's like it was okay. It was okay. And these are just little space fantasy films. I don't want to make out that this is the beginning and ending of all films, but I don't know. It annoys me when, and I don't know. I can work myself in a lather over very small things.
We're going to give you plenty of opportunity to work yourself in a lather in this episode here. This is what we're going to do. We are going to we're going to make this this segment really short so we can spend even more time on the parallels, because there are a lot of parallels in Star Wars. I told you this, but actually when I was in college, I did it for my Asian religions class. I did a paper on the parallels between Taoism and Star Wars, and there's so much philosophy, especially Eastern religion philosophy for the original ones, but that those same kind of views, they translate into the way we invest too, which is pretty interesting. So we'll take a quick break here, but remember the indices are acting really well. The trend is your friend, and we are in a bull market right now. So you want to make sure that your watch lists are fresh, that you're keeping a close eye, because there are still more stocks breaking out, and that could give you more opportunity to get into this market. But coming up next, we are going to incorporate some of those lessons from Star Wars and show how you can use those lessons in your investing strategy. Stay tuned.
Good morning, everyone, and welcome to IBD Live.
Okay, here we go.
Ed Carson is our guest on Investing with IBD. Okay, Ed, let's get into this. Let's go over Star Wars, the philosophy, and the lessons that Star Wars shares, for especially 4, 5, and 6, episodes 4, 5, and 6, the original ones as we remember them. And how you can use these lessons in investing, because there are a ton of parallels here, and so I guess the first one we'll start off with is, don't just kind of the philosophy, don't force it.
Yeah.
Right. So what are the parallels there? There are tons of them.
I mean, you don't want to. Sometimes people want to make gains in the market. They're thinking, I'm going to just push it, when the market isn't really in great shape, or you're just not picking the right stocks. I mean, sometimes you have a bad run of luck, and it's feeling like, I got to make it. No, what you need to do is you need to take your time and have patience and have discipline. Wait for the next market rally to come in, or wait for, new setups to show up that, to do that. Because some people, that is a common problem. And it's a problem that, I've had too. I think most investors have it.
Definitely.
They get into a situation where it's like, I got to go, I got to be invested, or I got to do it, and I got to buy something, or I don't care if I'm losing, or I don't care if the market's slipping. I got to keep going. I got to make my target, and I got to do that. And it's like, well, no, you've got to listen to the market. You can't force things. Let the force flow through you, as it were.
and that's well said there, Ed. What I usually tell people is that when you start to notice that you're taking a lot of losses, right? So maybe you're wrong like 5 times in a row. You're forced to cut and sell and protect your principal at that point. A lot of times it might not be you, it's the market, right? The market's choppy, the market might be getting more dangerous, and so you want to reduce your position sizes. You don't want to have as much money exposed at that point. You want to move more to the sidelines. In the same way, when you're on a winning streak, right, and every stock you try goes up, and you're making money left and right, and it's like, well, this is so easy now, right?
Yeah.
A lot of times, the same thing. It's not you, it's the market. It's not that you're getting better at this. It's the market is now in a great uptrend, and it's giving money out at that point, right? And so it really is that you want to go with the flow at that point, and you don't want to force it, and you want to. The sooner you can recognize that the tide is shifting, and the way you're going to recognize that is through the feedback in the market, how many times you're right, how many times you're wrong. And as you start seeing that change, the sooner you can recognize it, the quicker you're going to prevent yourself from really starting to take a number of losses or big losses.
I mean, the point that when things are going right, it's probably a lot of it's the market is so important because you can start feeling that you're invulnerable, that you can't be touched. It's like, no, you can very well be touched. I mean, there were some bad days in this year market this year, like early September. There were some bad days for growth stocks.
Right.
And and the market actually did okay, but the growth stocks got killed. And it didn't matter how great you were doing before then, if you didn't react quickly, you really could take some serious losses because a lot of those stocks fell for several months.
Yep. And okay, so let's go to another one here. And this was a quote. We can set this one up. It's there is another. So this is an empire, right? Luke Skywalker decides to continue with his training with Yoda, and he hops in his X-wing, flies off to go to Cloud City to try to save his friends, and then. Ghost spirit Obi-Wan is chilling there with Yoda, right? And they're having a conversation, and Obi-Wan says to Yoda, "Nah, there goes our hope."
Yeah.
Right. And what does Yoda say?
No, there is another. And the thing is, there is another. If you think about this stock, I missed Apple. It's like there's been a lot of other stocks that have broken out. If more importantly, the market. You might think, oh no, I missed my chance. It's like. You might have felt that way in late 2018,
right. And
then the stock market tanked. It's like, oh boy, it'll never come back. Yeah, it'll come back. And we've had a lot of big rallies. I mean, even in 2000, 2002, a long bear market, or 2007, 2009, bear markets, like eventually it comes back. So you don't have to put all your eggs in one basket. You don't have to say, well, this is my only chance to invest. No, sit back. You can wait for a new hope, as it were.
Right. and so I mentioned Cloud City. Now, Cloud stocks are starting to come back. And I think my another question I have for you is, what do you think of Lando? Played by the great Billy D. Williams.
I mean, it was a fine character. It was a little bit,
A fine character?
I mean, I like
that guy was the man.
I liked him a lot. I mean, it was like he was smooth, but a little sleazy, a little bit more than Han, especially since Han was becoming a good guy. So let's get this guy in here. And it was great. I mean, it was a cool transition. So I mean, the city among the clouds, kind of thing. Maybe there are some stocks like Shopify that are coming back, but right. So we'll see because that might be the next crop because a lot of chip stocks are extended. But Lando was great. Han Solo was my favorite character.
Yeah, Han Solo was cool, and Han Solo did call Lando a scoundrel, but he is my friend. Let's go to the next one here, and this is we better start the evacuation. So. Well, why don't you set this up?
Yeah, I mean, this one's not the most famous line, but it's like after the rebels on planet Hoth, they realized that the Empire has probably found them. There was a droid that it's probably from the Empire, and so the immediate thought that the rebel commander has is we better start the evacuation. And the thing is, the parallel to investing is sometimes the stock market is going great, but then you start seeing a negative day. Okay, you have a bad day. Now that doesn't mean you have to panic. It just means it's like maybe you lighten, pull off margin a little bit, or just weed things out, or take a little bit of profit, and down. Then it got further, later on. Then of course the Empire actually came through. Right. They tried to hold off. You saw that they tried to hold off, the bears, as it were, but eventually they broke through, sort of a decisive breakthrough the 50-day line, as it were, when they said Imperial troops have entered the base. Leia immediately said, give the evacuation order. And they were evacuating. They had already been pairing losses, but this was like, now that's it. Just get out completely. I mean, and that's the way you need to do it. The way you don't do it is just sit there and wait and hope things turn around. And that's what The Last Jedi was all about. The plot for The Last Jedi was basically, why don't we just keep on going until we run out of gas? And that is literally their plot. And if you do that with a stock that is under pressure, I mean, if you say, well, Snapchat will come back and then it'll wait for like 2 years for it to bottom out. It's like, that is not a good strategy. And that's just, and that's just another reason why The Last Jedi is a terrible movie.
Well, they in The Last Jedi, the rebels there, they became long-term investors.
They did. That's
right, because they were stuck.
They were
at
stuck.
that point.
They couldn't get out. And and they wouldn't tell anybody. That's a bad sign. It feels like you just want to hide it.
That's true.
I mean, if you're sitting on losses, it can be hard to admit that. And so there was the plan. I mean, supposedly there was a plan, but it was basically run out of gas and hope they don't notice when we ditch our boats, But I mean, and it didn't work. So that was great. That was nice after all this time.
It almost worked, though.
It almost worked.
They were slowly sneaking away.
But that was one of the things that you don't want to do with stocks.
Now, so I think that let's just review with the 2018, the end of the fall of 2018. That was a perfect example for the better start the evacuation, because that came on subtly.
Yeah.
And you really started seeing it, and you usually do. So you start seeing it in the leading stocks. I think I might have had like Roku and Wingstop and stuff like that. They were working, and all of a sudden they just really started to collapse. Like, whoa, that was their change in character. So that was your first warning sign with the droid with that Han Solo shot, right?
Yeah.
It's a good thing that the Empire knows we're here.
Yeah.
So that was kind of the first thing, and then once you started seeing more stocks break, and then distribution days started collecting. That was like the AT-AT walkers with that poor rebel looks in the with the binoculars, and he's kind of adjusting, and it just sees like those the feet of the AT-AT walkers or whatever were coming towards him.
Yeah, and I mean, also think about the ending of Empire. This is how you want to be. I mean, they were all beat up. I mean, Han's frozen. The rebels were on the run. Luke's lost his hand, but they still have a fleet. They've preserved their capital as much as they could, so they were ready for the next fight.
That's true.
Meanwhile, at the end of Last Jedi, literally everyone can fit in the Millennium Falcon that's in the rebellion. I mean, if you lose 99% of your capital, it doesn't matter if you can become a stock pick. I mean, it's going to take so long to come back from that. So when you think about that situation, you need to be ready for the next fight when things are more, if you're losing, you've just got to get out. You want to be like you are at the end of Empire. You've been bruised. You've been shaken. That happens. You got to dust yourself off and be ready for the next times. You don't want to be like the shiny, happy people at the end of Last Jedi, where there's 30 people. Let's go take on the Empire, guys.
let's go to the next one right here. I'm not afraid, and this is where Luke says to Yoda, right?
Yeah, and Yoda says, you will be.
Right.
And that's
and Yoda gets kind of scary at that point.
Yeah, a little scary.
You thought he was like this really friendly kind of Muppet, but then he became really kind of scary. I think he was trying to scare Luke at that point.
Yeah, I think so. And you need to, and to be honest, you almost need to lose some money in the market,
right?
Because if you think it's easy, it's not. There's a lot of issues going. You're just gonna lose money. Even if you do everything right, you're gonna lose money.
Yep.
And so you need that humility. You need to, there's nothing wrong with a little bit of fear. You don't let fear control you, but you have to be wary and just rational about the market. The market can turn, stocks can turn, and that you need to have a healthy respect for that you are not just invulnerable. And I think Yoda was very much trying to say, like, yeah, you think you got this? No, you do not. This is going to be very hard. And to become a successful investor, it takes a long time.
Yep. Use the Force. So we kind of touched on this earlier. But, yeah, this comes down to trusting the trend, right?
Yeah.
And trusting the charts. It's amazing. And there are tons of parallels with this one. Once you learn how to read chart patterns and you start to recognize, powerful breakouts and companies that are very fundamentally strong too, and you start putting those together, and you're now in a strong environment, it's crazy how all of a sudden you buy at that right time and you're in the right environment, and they just start working really well, and you have to kind of trust that. And that trend, and really trust the history that's backing up all of the reasons why we do this.
Yeah, I mean, you have to trust your instincts to a certain extent, but it's just, backed by the knowledge, and just if you buy it, buy at the right time in the right kind of market, really good things can happen to you. And so you have to use your instincts, but as I was saying, you can't let your emotions control you. You have to be able to sort of be in the zone, but not. And I wouldn't advise this for investing, but it's sort of like the people who's like, oh, I play pool better when I've had a couple of beers, kind of thing. It's like, oh, I'm in the zone. I'm in the right mindset. And I think that's really important.
Size matters not.
Yeah.
That's what Yoda says, right? Yoda says to Luke. And then, both of these kind of go the same thing. And then what Luke says when he sees the Millennium Falcon right here, what a piece of junk.
I mean, that is really important. I mean, Luke, of course, had preconceptions of what a great ship would look like, or what a great Jedi master would look like. And the same thing, what investors can have that kind of feeling. Like they might think, oh, well, they've all got to look like Apple, or they've got to look like this hot chip stock. And those can work. And obviously Apple and chip stocks are doing great right now.
Right, exactly.
Nothing wrong with looking like a superhero. But, at the same time, stocks can be small, that can be huge winners. That's why IPOs are often big winners. And sometimes they're in areas you don't think of. Actually, when you think about a piece of junk, when you think of that, it would be Copart.
Yes.
Which is actually...
And we'll talk more about Copart in the next episode, the next segment.
But it's actually a salvage auctioneer company. So, you have to be ready for that. And just in general, don't have preconceptions about what the right stock, what the right market is.
The Emperor versus Yoda. There are a lot of lessons here, how each character, and they're the most powerful characters on each side, how they both approached the Force and how they approached life.
Yeah, there were a few differences between the two of them. Yeah, I think one of the most important things for investors is that, there is the Emperor was always so sure of himself. He was he had a lot of reasons to be,
right.
But he actually said, like, everything is going as I have foreseen, or something words to that effect. Whereas Yoda, Luke is asking, what's going to happen? It's like, well, Yoda, always changing is the future.
Yeah.
I mean, we look at chart patterns. We look at the market and we say, well, we can interpret it and say that things are going well now. And that's a positive sign for the future. But that can change right away. I mean, we saw it all the year with Trump tweets going back and forth and the market going this way, or the Fed rates. But there can be those decisive turns. In late 2018, everything was looking good until all of a sudden, now things are not. I mean, not all of a sudden, but it can change.
Right.
And then it got very bad after a few days and then a few weeks. So that's just something to have, that kind of humility. He's a master Jedi and he can't predict the future.
Right. Now the Emperor also liked to concentrate and put all his eggs in one basket. And if you don't watch that basket closely, it could backfire like it did on the Emperor.
Yeah, I mean, there's nothing wrong with concentrating on a few stocks. We talk about that a lot because you don't want to be in a bunch of average stocks. You want to be in the great stocks. But he not only, it's a little bit like investing in the same stock over and over again. He was like, I'm investing in the Death Star again. The first time it got blown up, but whatever, we're going to do it again. And not only did he build another one, he got onto the Death Star. I mean, he is like, okay, now I'm all powerful, like the one thing that can happen, the only way. But he was so sure of himself. It's sort of like, I'm going to go fully on margin on a stock that can go up or down crazy, like Tesla, which is doing well today. But that one, it could go down 20%, at any moment, or a biotech. And it's like, I'm just staying here. I'm going on vacation. I'm not paying attention, not putting any stop losses or anything. And it just, that kind of cockiness, is just crazy. You're just going to be, you're going to get burned. And you can't come back from what the Emperor faced.
Right. That's true. You need to practice at your craft. I mean, for the original trilogy, this was kind of a common theme throughout all three movies here.
Yeah, I mean, when you think about it, it took 3 movies for Luke to become a Jedi Knight. I mean, he famously, during his first confrontation with Darth Vader, Vader says, "You've learned much, young Skywalker, but you are not a Jedi yet."
Yeah.
You can have talent. You might be able to pick stocks well. You might do certain things, but you may not have it all mastered. And you need, and you can get hurt pretty badly if you try to go up against, you can get your hands cut off is what you can do. And so that was something that it took a long time, Yoda saying you have to unlearn, and, it took all that time. Meanwhile, in the new movies,
here we go.
Rey, I actually liked the actress and I liked the character, but the character was perfect and knew the Force without any training.
She was a natural.
She was a natural and could beat anyone. That's not how it works. I'd even accept a 2-minute wax on, wax off montage to show her training. And then she goes to Luke and she doesn't learn anything from Luke. And so it's like, and she's still super duper. I mean, she's basically as powerful as anybody in the Force, and she hasn't taken one lesson. It's like, that isn't how investing works. Investing is much more like Luke is. I mean, you take some bruises along the way, and you gradually become a better at your craft, honing your talent, as opposed to just being naturally good and everything's going to work out for you perfectly.
An analysis of the plans from the episode 4, right, where they got the Death Star plans.
Yeah, the whole movie is really centered. The MacGuffin, as it were, is they got to get the plans so they can figure out how to defeat the Death Star. Before you don't just go and buy a stock. You should never just do that. Oh, that looks neat. That's breaking out of a base. And, well, maybe it is a good stock, but you need to do research. And this is why you need to analyze stocks before you invest. It's like, this is why we run screens like, on MarketSmith, stocks near a pivot, or just look at things going through and seeing which stocks are doing well. Oh, this stock broke out, or, what are the other ones? And doing the research on it. Well, what are its earnings history? What does it do? What's the story? Should I, not only do I like it, do I really like it? Do I think that there's a lot of potential here? And then you make your decision. So when it breaks out, you can go down that trench and say, this is where I got to go. I mean, it seemed like a pretty high risk strategy, but at least they did an analysis of the plans. And that's something that investors really need to do.
2 more here. Han Solo said, "It's not my fault."
And Lando said it later.
Yes.
In both cases, the hyperdrive isn't working. And it's just like, wait, what happened here? And this is sometimes as an investor, thinks you're doing everything right. That you've bought the right stock, the market is going well, and then something really bad happens. Bad earnings report, bad drug trial news, or what have you. I think a great example of that is Xilinx. It was like one of the first stocks to break out.
Right.
So, and it was hot. It's in this 5G space, everything that you're going, and it has a big earnings, gap and then runs up, and you have a big cushion in it if you bought it off the earnings gap.
Yep.
And then, oh boy, that was a really nasty earnings report. I don't remember if it was the guidance or what have you.
Down 20%.
Down 20%. So pretty ugly. You didn't do anything wrong, but you have to deal with it. I mean, they're still firing lasers at you.
Right,
it doesn't matter if it's not your fault that you're losing a ton of money.
Sometimes you just got to jump to the garbage chute.
Yes, jump to the garbage chute. That's right. And that's just, and you just got to punch it and just.
and focus on the leaders. Star Wars has definitely taught us that, right?
Oh, absolutely. One definite thing is, look, we can talk all day long about whether some films are okay or decent. There's 2 great films. There's the original Star Wars: A New Hope and Empire Strikes Back. Those are 2 great films. And some are mediocre. And the same thing is with stocks. There's a lot of stocks out there, and a lot of them are okay. A lot of them are good. But you want to focus on great stocks, not just great stocks, but to quote Men in Black, the best of the best of the best. And, that's what you want. And because those are the stocks that are most like the big winners. I mean, it's hard to be like Bill O'Neill, who always seemed to find the stock in the big thing. So maybe you aren't going to get the stock, but you want to try. You want to be trying to get those like 4 or 5 stocks that are among the, the 20 or 30 of that cycle. You want to be trying for that rather than saying, I'll just buy this stock. It seems okay. It's like, well, why do that? Why not just buy an index fund at that point?
Yep.
So that's why don't buy a Rogue One when you can buy an Empire Strikes Back.
and when you start doing well, you will always want to keep in mind Han Solo's advice to Luke after he blew up some, I don't know where he blew something up, and he said, "Great kid, don't get cocky."
Yeah.
That was when the TIE fighters were coming out.
That's right.
They're in the Millennium Falcon.
I got one.
Yeah, exactly. Exactly. Great kid, don't get cocky. So when you start winning a little bit, you want to keep your emotions in check and don't think that you're actually getting good at this.
It's especially important because you're going to be doing well maybe when you put down, let's say you're betting off with $10,000. Well, If you get cocky when you're up to $20 or $30, $40,000, all of a sudden, the percentage losses may not even be that huge, but all of a sudden you can take a huge amount of your gains, because you're betting more and more. And if you're on margin, all of a sudden, so don't get cocky. You just never do that.
Perfect. So you can learn about investing anywhere, even in a galaxy far, far away. Coming up next, Ed and I will talk about 3 stock ideas. We'll be back. Want to find stocks like the ones on this podcast? A lot of the best names we talk about come from IBD's exclusive stock lists, like the IBD 50 and the Big Cap 20. Whatever type of investor you are, we got a list for you. You can access every one of IBD's lists, plus stock ratings, exclusive analysis, and one-on-one coaching with a membership to IBD Digital. It costs less than $1 a day, but for podcast listeners, we're offering an even better price. Go to investors.com/podcast offer right now and get your first 2 months for only $20. We are back with Ed Carson on Investing with IBD. Now, this is the 3rd segment of this episode, but unlike Star Wars, this segment hopefully will be good. So, Ed, let's get into some current ideas that are on your radar. And, of course, we are going to continue with the Star Wars theme here. And the first stock is Copart, ticker symbol CPRT. And why is this on the radar today?
Well, first, of course, because of, what a piece of junk. This stock, this company literally sells pieces of junk.
For the Millennium Falcon.
The Millennium Falcon. Now we know the Millennium Falcon is great, but if you didn't realize it, you might think it was a bit of junk. And Copart has been a really strong stock. It's been on leaderboard, I think, for several months now. It broke out nicely. It found support at the 50-day line, came back up, and now has formed a 3-week tight, which is an area of support. When the stock closes really tightly at the end of the week for a couple of weeks after running up previously.
Yeah. And
there's been a number of tight patterns, which again follow the market. There's been a lot of 3-week tight patterns as the market consolidated for a while now. So this one does salvaged vehicle and then sells them online, and it's had really strong earnings growth. And so this is why you should be looking at it, why you should focus on screens to a certain extent. There's a little bit of intuition and stuff out there, but really run the screen so you're not missing stocks like this, because I don't think you or I would be thinking, what I want to do? I want to see how the salvaged vehicle... I want to look that up. That's my core.
Leader.
That's a leader. But you can't let that size matters not.
Yeah.
All that stuff going through.
Exactly. And this is where it comes down to trusting your instincts, trusting the chart, using the force. Right? Because when the stock had a lot of things going for it with the earnings and the sales, and then it broke out back early this year in February out of a cup with handle, or in March, and it's just been on a amazing trend, and the trend is your friend for this stock, and it's continued to find support off that 50 days. So it continues to act well. Now it might be getting a little bit more obvious, so you want to keep that in mind. But at the same time, you don't want to just assume that it's not going to work anymore. There are only so many great stocks out there, and this has been a nice stock for a lot of institutions to park some money at and not have to experience a lot of volatility.
It was a great point, because there were a lot of the stocks that were big winners at the beginning of the year, then they sold off.
Yeah.
So this is actually one of those, there weren't that many stocks that actually broke out in February and really didn't ever break down and are still leaders now.
Yeah. This is what we call a steady Freddy, where it's just going on a nice 45-degree angle, and these are the perfect stocks that you want that act as a counterbalance to maybe some of the more volatile stocks, like the cloud stocks or some of the more tech-related stocks. So that was Copart, ticker symbol CPRT, continues to act well. Let's go to the next stock on our list, and this is Disney. And, of course, Disney now owns Star Wars. They bought Lucasfilms a few years ago, right, for $4 billion. A little bit more than the Marvel deal.
Yeah.
So they just a little bit more. They made it just a little bit more so George Lucas would be happy, because they didn't want to sell for the same price as Marvel. So they've acquired it. Of course, they've released these movies over the last few years here. And what do you think about this stock? This stock, it broke out of last month out of a cup. It's found support on top of its pivot. Obviously, it's a really, really big company. On I own shares of this. I actually also own shares of Copart too. Uh, with Disney, I'll be honest, from my perspective, I'm a little disappointed that it's not higher right now. I thought that this would have, with the way the market's been acting, I would have thought that this would have done better. But it is such a large company that it's a little bit harder to push this one up.
I mean, you can always, in hindsight, come up with reasons why it did or didn't do it. You know,
Right.
it surged in April on the news that it's going to come out Disney Plus, and with the relatively low pricing, it broke out. You know, earlier last month on news that Disney Plus had huge demand.
Yeah.
And so basically, Disney's earnings and sales their earnings do not look good, and they won't look good for a while. They're spending a lot of money on streaming, and a lot of their existing stuff it's going down. So, but everybody sees this as transformational, that they're going to transform, shift away from being so focused on movies and having this declining ESPN and going up. So that's the hope, that down the road. I mean, that's basically the Netflix model, only Netflix doesn't have earnings really to turn around, not real earnings.
Yeah.
But so they have that huge library, and everybody's hoping for that. And we have seen a lot of these stocks forming this. They broke out without a cup, and a cup without a handle, and now they've sort of formed this shelf.
Yeah.
You know,
can call it a high handle.
High handle, okay. But it's sort of tricky, and it is tricky because, I mean, I prefer a cup with handles because then you know what the buy point. It's sort of like, is the buy point with Disney, or is it maybe a downward sloping off the high handle or just at the high handle? So maybe it'll form a base here, which might not be bad.
That's true. It might form a flat base or something.
Yeah, so it could happen. I mean, it will be interesting to see how this movie plays, because, you know, the reviews haven't been good. Just, you know, if it doesn't do as well.
Were they reviews written by you?
I have not seen it, and I try to keep my dispassion about it when I think about the stock. But, you know, so that'll be an issue because it could damage the Star Wars property, because The Last Jedi did seem to have blowback. It seemed to hurt Solo. Is the fallout going to continue here? Is Star Wars somewhat damaged? They paid a lot of money for it, and so that would be something, obviously a big in their content library. So that would be an issue, at least short term.
Now, speaking of content, now Disney has all of the Star Wars content on there.
Yeah.
Right? Now, do they have, there's one piece of content that I'm really interested in. Do they have the Star Wars Christmas episode
on there? Oh, God, that is the best. That is the best. I actually saw it.
I saw it too.
That was great. But what they did get from Fox, the most important thing, wasn't just the movies, but they also, now we have the rights to play the 20th Century Fox music before the Star Wars movies again.
Oh, that's so funny.
Because that's when
that's how you grew up. Every time I would hear that, I was expecting Star Wars to come on, and then the Crawl to come.
Yeah, and instead it was like, what? They make other movies? What?
Yeah. That it was like an amazing branding kind of thing right there. Every time I would hear that, that's really funny. Well, now, just to make clear, that Star Wars Christmas is an utter disaster. You never ever want to watch that. It was so bad. It was a made-for-TV special made back in 1978 that George Lucas tried to go and buy all. He bought like all of the tapes and tried to destroy it, and he didn't want to even admit that it was even made. But luckily out there were a few people who actually recorded it on VHS, and it got out on YouTube, and you could actually watch it, and it will be a huge waste of time. But those are the first cracks. That was the first distribution days, I think, for George Lucas, that, hey, he might not be as great a storyteller and movie maker as you think.
I'm not sure much how he had to do with that.
Oh no! Alexis in the studio mentioned Mandalorian. Yeah, so the Mandalorian is coming out. Well, is very popular, right? And that is also another reason why the stock is, why the stock has been doing well. Because from what I haven't watched it, but from what I heard, it is actually very, very good content for Star Wars.
I have not watched it. I've heard good things. You know, Baby Yoda is the biggest meme in the world. And they're going to have other Star Wars shows, other Marvel shows, and so it's just, there's going to be a lot of new content. It's, when you think about the content that Disney has,
no one can match that.
No one can match it, not even Netflix, and it's just like Apple TV and all these others. You know, it does seem like Disney's going to be a winner in the streaming wars. Yeah, and that's the most important thing when you think about all that stuff. It is going to be one of those must-haves. If you have little kids, I can't imagine not having Disney Plus. And like right around Disney Plus came out, and what did Netflix do? They signed up. They're going to get a SpongeBob spin-off.
Oh wow,
that was something that's like, oh wow, that'll be exciting. It's like. Nobody's watched Nickelodeon in 10 years.
Okay, we'll have to save your
Sorry.
your angst for Netflix for a future episode. Let's go to the third and final stock here. This is Shopify, ticker symbol SHOP. I also have shares of this one, and it's building a big cup according to the pattern recognition on MarketSmith. But it came out of a lower part of there was a smaller trading range within that cup. That it emerged out of a few weeks ago, and really once it got past that 349 level, you could have used that kind of as a little cheat area, or at least I did.
Yeah, I mean, it was sort of a double bottom base. I'm not sure if it quite qualified there or not. There was back and forth on that. We've been discussing it a lot on IBD Live. One of the issues here, it tried to form a handle, but it really didn't. It sort of kept on going. And Shopify was basically the last of the great software leaders to crack. Now, it did crack, so it came down, but it didn't fall that badly when you think about so many of the others, and came back relatively quickly. Its earnings outlook is still very strong. It had a bad report. There were some strange things in the last report, but the growth outlook is still very strong. They're trying to expand and be more of a competitor against Amazon. There's a lot of great things about this company. So this could be the really, truly great leader. There's also Paycom and Paylocity, but when you think about, is there a great stock from the first half of 2019 that's ready to break out, Shopify would be up on that list.
Perfect. So there are three ideas to consider adding to your watch list, or consider buying, adding to your watch list, and waiting for a proper time to enter into it. So thanks, Ed, for joining us today and sharing all of your grievances about Star Wars.
Just call me General Grievous.
That's it for this week on Investing with IBD. Now, over the next couple of weeks, we are going to take a break because of the holidays, but we will have some bonus content and a bonus episode that we are going to call War Stories with Jim Ropel. That will be released sometime during the next couple of weeks. And so I wish everyone a happy holidays, and also enjoy the movie, unlike Ed, and may the force be with you.